Welcome to the Stock Scores Market Minutes for April 11th, 2016. So when do you want to avoid buying strength? It's important to buy stocks when they are going up, but we also need to avoid chasing stocks higher. Strength is good, but buying when upward trends go parabolic is bad. Buying when upward trends come into resistance is bad. We want to buy stocks when they start to get strong. I'm going to show you a couple charts for Facebook. Both of them demonstrate these different concepts of when it is the bad idea to be a buyer. So when I talk about parabolic trends, what I really mean is when the stock runs away from the trend line like it did there. There you had the trend go parabolic to the upside. That is the wrong time to buy this particular stock. You want to buy strength when you get pullbacks to the trend line, which happen a number of times. Now, the other time when it's bad is when markets rally into longer term resistance. Now, this is a 180-day daily chart. The last chart was an intraday chart. And you can see that there was resistance there, and you carry that across, and that's exactly where Facebook got stuck at $116, $117 when it had rallied into resistance. So it went parabolic into the 117 zone, it got stuck, and on the daily chart you could see that that was the likely place that it would stall. A week later, it's breaking down, which it did this Friday, and likely to move down into that support area at around 104. All right, let's get into this week's market analysis. The upward trend in the short-term time frame for the SPY was broken this week. We had that right here. It attempted to rally back, created a falling top. We had then weakness on Thursday, another attempt at strength Friday morning, and another falling top forming. So you can see that the short-term upward momentum is starting to roll over on the S&P. Looking at the weekly chart, we see why. We've talked about this every week for the last few weeks. The market is rallying into the long-term downward trend line right around 207, 208, which is where it got stuck this week. Now, it's very much expected that the market will stall when it rallies into resistance. We can see that we have this downward trend line, which was formed by these tops. And so it's not any surprise that the market is stalling here. What we need to see is, does the market consolidate and then break that downward trend line, or does it instead roll over and start to move down again? And it's really too early to tell. The short-term chart, the intraday chart that we looked at before, at this point is just saying this is only a stall. We will see if it culminates or builds into something else. On the IWM, similar situation, downward trend line. We hit the downward trend line this week, and therefore, at a minimum, we expect it to stall, and certainly it could correct and move lower in the near term. Moving along to the Canadian market, you can see that the upward trend was broken a few weeks ago, and we've now built this fairly shallow downward sloping channel. We're at the top of the channel there, with a little jump higher on Friday because of strength in gold and oil. But the downward trend, the downward sloping channel, has not yet been broken, and so we got to remain negative in the short term. However, that could change Monday morning if we can pop up through the top of that channel. So at this point, I'm negative, but that could change very quickly. On the longer term time frame, of course, we broke the downward trend a few weeks ago. We're now building a rising bottom, but we still need to break from that rising bottom before we can get bullish. So this is a neutral chart at this point. The TSX Venture had a good week this week. It broke from some low volatility. We talked about strength returning to the TSX Venture market last week, and you see that coming into this week. I think it probably moves up into here before it gets stuck, but certainly a positive sign. This market tends to go pretty quiet at the end of May, so I don't know if this strength will last, but certainly there are some opportunities showing themselves in the TSX Venture stocks. You just have to be a little careful because liquidity is not that great. All right, treasuries. Downward trend line broken some time ago, early in this 2016. And then we had a flag pattern build there. Of course, we broke that last week. We continued to show strength this week, and that tells me this probably is going to move up and test those highs, which of course means interest rates going down. US dollar has been sliding lower. We had some real exceptional strength in the yen this week, and that is one of the reasons cited for the weakness in stocks this week, because of course hedge funds and institutions will borrow money in Japan, in yen, pay it back with their stronger dollars. But now that the dollar is falling, well, that so-called yen carry trade starts to work in the opposite direction. People have to take money out of the market because that borrowed money in yen requires a greater carrying cost. And that's one of the problems we're seeing right now. So US dollar is at fairly important support right there. And we'll see if that can hold up. It needs to bounce very soon. It's actually starting to tickle through those areas of support. So if this breaks down through here, we could see further weakness, and that would be negative for many of the industries that have done well because of a strong US dollar. But it also really helps the commodity markets. If this starts to move down, commodities do well. And I think that's one of the reasons why we're seeing some strength in gold and oil. It does, however, also, if we do have a weak US dollar, it does give the Fed greater cause to raise interest rates. You know, in December, when the Fed raised rates, we had the dollar moving up at that time, going into that raise. And the world was kind of shocked and dismayed because, of course, a strong US dollar is bad for the global economy. And so I think that was one of the reasons why the Fed scaled back their discussion of a raise in interest rates. Well, now, with the dollar down here again, I think you might see the Fed start to say, hey, we can raise rates again, maybe at the next meeting. So I think that discussion may pick up some momentum, and we could see all of this unwind very quickly. Gold breaking this little flag pattern right at the end of the week here. We talked about that last week, watching for that flag break. So that's a positive for gold. I picked up a little bit of gold stocks on Thursday, and it does look like the gold stocks want to move higher again. And so I'm feeling a little more optimistic in the short term. Still lots of work to do longer term. U.S. oil fund, USO, very similar situation. Had a flag. We actually broke some support. And then we've come back to break the flag with some good price action on Friday. And that points to higher prices in the short term for oil. And that could also bring a break of the long-term downward trend, which is kind of like that, maybe a little bit lower. But we're starting to see the momentum build to the upside on oil. You can see that we've got rising bottoms building here. So starting to see that positive sign for oil. Fear took a little step up this week, again, largely because of the strength in the yen, breaking the downward cycle for the VXX. That could point to further weakness in the stock market. But again, I think it's still too early. I don't want to say that the sky is falling just yet, but caution is warranted. So US stocks, I've got neutral ratings on both time frames. Canadian stocks, neutral, longer term, bearish short term, but this could change to at least neutral in a day if we get a break of that little downward trend line I spoke of. Gold, neutral on both time frames. We're starting to see some momentum picking up, so this could go positive on the short term very soon. Long-term bearish on oil, but it is testing that long-term downward trend line. That's a good thing. Neutral short-term, I'm raising it from bearish last week, so that is a positive for oil. U.S. stocks starting to roll over and lose that upward momentum. It's too early to say, however, whether it is a start of sideways trading or another correction. Oil and gold are catching some bids to end the week, may break their pullback. Fear starting to increase, but it's not serious yet, but I do want you to trade cautiously for the week ahead. Make sure you follow me on Twitter. I put out comments on the market during the week. It's at Stock Scores. Just go to Twitter, look up at Stock Scores, and it's free to follow me, of course, and you get a little bit of intra-week updates. Have a great week in the market and trade well.